as I always tell people, Phil, they have to do their own research and understand the appropriate risk for themselves. But how has the MoneyTalk portfolio been doing?
It's been doing well. Sort of well. It's down $17,000 from the last time I was on your show. That's about 3.9%. But on the whole, we went into a protective mode because we were very concerned about the first quarter earnings, and we got burned, of course, because the first quarter market went up.
Yeah.
But we were protecting our lead, and we're still up 327%. So not a tragedy. And also the quarter before we had gained $75,000. So we were kind of locking that in and protecting it. And that's what we did. But we got a little too conservative and then we got burned.
That's okay. You know what? Protecting
Yeah.
327% is never a bad thing to do. So I think
No.
that's pretty good. Listen, I know you got a couple new trades for the portfolio, so let's get them started. The first one involves Pfizer. So tell me how you're structuring this one.
Okay. We also have changes. So we have the philstockworld.com/moneytalk. So all the changes and everything else is up there, including these new trades. Just want to make sure people know that.
Thank you.
So Pfizer, Pfizer's Pfizer. I don't have to do a big sort of like explain why Pfizer's a value. It's trading at like 8 times earnings. It's insane. What happened is they went on, COVID is done, cured, whatever you want to call it. And so their excess revenues from COVID went boom to nothing. But so what? They still make $15 billion a year. It's, so they're not making 20 billion, 25 billion anymore. They're making 15. But that COVID bonus, if you invest in Pfizer, you might still get your COVID bonus if it comes back. So you got that to look forward to. But just as a regular company, it's trading just way too cheap. And the setup we like for Pfizer was to sell 10 of the 2026 puts, the $30 puts, because you can sell those for $5.25. That nets you into the stock for $24.75. So there's your start. That's fantastic. They're at what, 27 something now, 27.50 now. We're using that money to buy 25 of the 2026 22.50 30 spread. So that's a 7.50 spread. And the whole thing works out to net $3,500 on an $18,750 spread. So there's a $15,250 upside potential, which is 435%. It's like silly. And that's only if Pfizer goes to that's if Pfizer goes to 30 and it's at 27.50 now.
And that's actually even bringing up the average of the MoneyTalk portfolio, if that's how it performs, which is a nice number. Let me ask you, and I always ask you the risks. What's
that's
the
how we
risk
got here, right?
Yeah, exactly.
we got here by taking trades like this. I mean, they work. Blue chip company, not very ambitious targets, and all it has to do is not go down.
Yeah. But what if it does go down? Yeah, what if it does go down?
If it goes down, your risk is owning 1,000 shares of Pfizer for net $30. That's your real risk in this thing. So we're owning $35,000 worth of Pfizer, but I don't think that's a bad thing.
Yeah, so and that's the thing. Yeah, no, and it's great people for just to understand, like, if you like it, then you liked it at this price, you're going to like it at this price, and that's, but you have to have the liquidity to do it. So that's important for people to know if it all makes sense for them.
Well, that's this kind of trading is for people who have portfolio margin accounts, like $100,000 or more in their account, and they can utilize the leverage, but also cannot caution enough. Do not over margin yourself. Never promise to buy more than you really want to buy, that you really want to own. That's where people go wrong with margin accounts.
Yeah, you're absolutely right, Phil. Okay, let's go to the second one. I got only about a minute and a half here. Chimera Investment Corporation. So this is CIM.
Yeah. Chimera, great REIT. All I'm going to say, great REIT, great management. They went through the 2008 crisis. They can go through anything. And in this case, we're going to do something different. We're going to buy the stock, 5,000 shares. That's $4.49 at the moment. And the same kind of thing. We're going to promise to buy 5,000 more at $5, but they're going to pay us $1 to make that promise. So by buying that, they're going to pay us $5,000, and we're going to say, well, we're willing to buy 5,000 more for $5. We're going to net $4, of course, because we're collecting the $1 up front. So we're actually lowering the net price on our commitment to buy 10,000, which would be $44,000 basically that we would have to spend. And we're also selling the calls, the $5 calls, for 32 cents. So we're almost saying we don't even want it to go up much. It can only go up 50 cents before we can't make any more money on it. But that nets us in for $15,850, which is $3.17 a share is our net. So if we get assigned the other 5,005, we'll have a $4.08 average, which is about 10% below the current price. That's our worst case, is a 10% discount. Our best case, of course, is we get called away for $25,000. We collect the dividends, and we're going to make about 70-something% doing that. And that's what we love about these things. And that's in 1 year. I'm sorry, these are 2025. So that's in 1 year we can pull this off, making 70% between the stock and the dividends.
And just in 5 seconds, Phil, the risk is just that what?
We own 10,000 shares at $4, so $40,000. But when you say 40,000 is the risk, and the same goes for Pfizer as well. If you're a fundamental investor, which is what we are, we're fundamentalists. We just use options for the leverage, but our fundamental premise is that this is the bottom for Chimera. So we don't see it as we're risking $40,000. We think it's highly unlikely they go below 4. So we don't feel like we're risking much at all. Realistically, anyone can go bankrupt. Obviously, look at Boeing. You never know if they're going to go bankrupt tomorrow if another thing falls off. But realistically, when you're looking at Pfizer and you say, oh, well, you're risking this much. I'm not risking $30,000. I'm risking maybe $10,000 if something horrible happens to Pfizer and they drop 30%. But it's highly unlikely.